Hello, ACCA students. In today's session we're diving into some key performance management concepts, the theory of constraints, TOC, and throughput accounting. You'll learn how to identify and manage constraints, calculate the throughput accounting ratio, TPR, and explore ways to improve it. Let's get started. The theory of constraints, TOC, is all about identifying bottlenecks in a system and optimizing them to improve efficiency and profitability. A constraint is anything that limits production or sales, and these can be physical, like machine capacity, or operational, like inefficient processes. TOC follows a 5-step approach. Identify the constraint, find the weakest link in the production or service process, exploit the constraint, maximize its efficiency without major investment, subordinate everything else, ensure the entire system supports the constraint, elevate the constraint. If necessary, invest in solutions like automation or staff training. Repeat the process. Once the initial constraint is removed, find the next weakest link. For example, if a restaurant's constraint is slow food preparation, streamlining kitchen processes or pre-prepping ingredients could increase throughput. Throughput accounting focuses on maximizing the contribution per unit of a bottleneck resource. The key metric here is the throughput accounting ratio, TPAR, which is calculated as TPAR equals throughput per factory hour divided by total conversion cost per factory hour. Throughput is sales revenue minus direct material costs. Conversion costs include labor and overheads needed to process units. A TPAR greater than 1 means the company is generating enough throughput to cover its conversion costs. If TPR is less than 1, the business is operating inefficiently and needs to address bottlenecks. Imagine a company sells a product for $100, and the direct material cost is $40, making the throughput $60 per unit. If 5 units are produced per factory hour, throughput per hour is $300, which is $60 times 5 units. If total conversion costs per factory hour are $250, then TPAR equals $300 divided by $250, which is 1.2. Since this is greater than 1, the company is operating profitably. But how can we improve this further? To improve TPAR, businesses need to increase throughput while controlling conversion costs. Here's how. Increase selling price. If the market allows, higher prices increase throughput without additional costs. Reduce material costs. Sourcing cheaper raw materials or reducing waste can improve the throughput calculation. Improve efficiency at the bottleneck. Streamlining operations, automating processes, or training staff can boost output per hour. Optimize product mix. Prioritizing high throughput, high-margin products can improve overall TPAR. Minimize downtime, ensuring bottleneck resources operate continuously, maximizes throughput. To summarize, the theory of constraints helps businesses identify and resolve production bottlenecks. Throughput accounting ratio, TPR, measures profitability relative to constraints. Improving TPR involves increasing throughput, reducing costs, and optimizing efficiency. Mastering these concepts will give you a strong foundation in performance management. Thanks for watching, and good luck with your ACCA studies.